Alright, Forex market, guys, we're back with the second analysis for the day. This is an important one, the dollar versus the Japanese yen. I believe we were here just yesterday talking about promoting the bearish campaign we had here, right? Now, there was something that was really was bothering us when we saw price action bouncing off 109.21. That was the first moment we started to suspect that something was rotten in the state of Denmark, because it was not supposed to happen. Price was supposed to break through and head towards the big target at 108.28. But here's the problem. Many times, right, we see two cycles interact. And you know, I mean, from the bigger cycle, from the bigger perspective, the weekly chart, there was a move that was supposed to go all the way to 108.28 and probably even below the previous low right there, 107.45, right? However, there was, well, that's the medium-term cycle. The short-term cycle interferes and begins to trade sideways, right? Starts to consolidate. And here's an interesting fact. The market likes to consolidate, likes to trade sideways more than it likes to trend. So, you know, more, I mean, we will see more consolidations than trends, pretty much, you know. So what I'm trying to say here is that many times we are looking at the bigger picture, looking at the bigger trend, expecting a, you know, a consistent trend, right? And what we get is consolidations in the middle of that move, and we just don't have the capacity to absorb, you know, to absorb these kinds of corrections and then to come back to the original move. Until that happens, we're not there yet. I mean, we're not there, right? We get out way before, and for many reasons, but we just don't have the capacity to stay over there. So what I'm trying to say is we always have to keep a close eye on the shorter cycle, right? On the shorter term cycle, and be ready to respond quickly. All right, and sometimes that means flipping over, because last time we've been here, what we've done was we saw the reaction. We didn't like the way price was bouncing off 109.21, right? So what we did was we closed 50% of the position, took a nice profit, and left 50% of the position for a potential breakdown, which obviously didn't materialize, right? Didn't materialize. In fact, it started to turn back up and managed to cross over 109.77, which was pretty much the break-even point of that second trade, the second portion of that position. So all in all, we got out pretty well. We took some profit off that position. We could have taken more, but our profit was sliced in half. But yeah, but the bottom line is that you know, it is what it is. Price action does seem to be starting to trade sideways, right? So it starts to trade, it starts to build a trading range. We got the 1, we got the 2, and I'm pretty sure we're looking at the third one under construction right now. So we flipped over, guys, very quickly flipping over, closing that bearish campaign, and now initiating bullish campaign. We got in with $5K, with $5,000. Hopefully tomorrow we can come back in and increase the position, increase the pressure. Right now we're starting relatively small, I guess, right? The target is 110.41. all right, so I didn't even place the top take profit order yet because this is all fresh. We literally minutes ago we pulled the trigger here. Alright, guys, so it's going to be super interesting to follow up on the situation here. I think this is a matter of a day or two, maybe 3. Should be quick. We're going to place our stop at 108.85. Yeah, and we'll take it from there. Alright, guys, so there you go. Dollar versus the Japanese yen flipping over. Now it's looking pretty good on the way up. Yeah, that's about that for this one. Continue off to the next one, guys. It's going to be equally interesting. We're going to talk about the euro versus the Japanese yen. So see you there.